Today we're going to talk about how to pay off your mortgage faster without killing yourself. And it's really not as complicated as it seems. Let's start with refinance. Wherever you are right now, you need to see if you have an opportunity to refinance, if you can lower that interest rate. If it's possible for you to lower that interest rate, that's always going to be step number one. If you want us to take a look at your mortgage and run the numbers and see if we can lower, and by the way, it's not always good to refinance if you can only lower the rate a certain number. Everybody's number is going to be different. If lowering an interest rate a 0.5% lowers your monthly payment by $135 a month, that may not be significant for you in terms of monthly cost. However, it might make sense for what I'm about to explain to you. Step one, where are you right now? What is your interest rate? Get that rate as low as possible, possibly get it into a 15-year. But here's the thing, even if you can't refinance right now, don't sweat it. You don't have to, but you do have to be ready to refinance when rates come down because you'll be missing out on a huge opportunity of paying off that loan faster. Which brings us to number two. You need to go through your monthly budget. Take 1 to 2 months of your life and analyze how much do you spend on things that are a little bit outside of what you actually need. Okay, groceries, gas, bills, things like that around the house, those are normal. Don't count those. What I want you to do is try to take inventory to see how much you spend on extracurricular things like going out to dinner. And here's a big one. I want you to go through your phone and I want you to see how much money you are paying either through your phone or through the internet. How many subscriptions are you paying into right now every month that you don't even know about? Now, there are apps out there that you can put on your phone to actually discover these wasted funds. But what I want you to do is just really go through and comb through every area of your life and try to figure out how much money are you spending on things that you don't even know about, or how much money are you spending on things that you don't even use or that you really don't need. And it could be a internet application, it could be a cell phone application, it could be a magazine subscription, whatever the case. And what you're going to do is you're going to put together a list of all the money you're spending every single month. And I'm almost going to guarantee you that you're probably going to come up with at least $200 a month that you are spending. And you're probably calling it entertainment. And you're probably calling it something that you need, but you really probably don't need to do this. Now, for some people, it's going to be a lot more than $200. It's going to be probably $500 or maybe $400, maybe $300, whatever. Come up with that number and I'll explain why in the next step. Let's say you came up with $200, which by the way, I came up with $200 in about 10 minutes of money that I was spending in things that I didn't even use. So for me, I was spending $200 every month on something that was not serving me. I was just kind of brushing it aside, whatever. Let's say you have a 6.5% interest rate on a $500,000 mortgage. Let's assume that you take the $200 that you were throwing away every single month and applied it to your mortgage every single month. If you did that, you would remove 5 years from a 30-year term. So instead of having to pay that mortgage for 30 years, you'd have to pay it for 25 years. You'd save yourself 5 years of mortgage payments. And if that isn't enough of a reason for you to think about this, then let me ask you this. How much money do you think you would save in interest alone if you took $200 and applied it towards your principal? And by the way, what I mean by that is if your mortgage payment's $2,000, every month you make $2,200. That additional $200 goes to reduce your principal balance. I'll just tell you, $117,000, actually more than that, more than $117,000 you will save in interest if you did this one little thing. You look at your budget and you ask yourself, do I really need to go out to dinner 4 days a month or 6 days a month? If I just cut back 2, holy cow, I'm gonna make $117,000. The law here is compounding action. And let me explain that. Every month that you pay $200, the impact of your $200 is greater. So for the first month, it makes a dent. Second month, bigger dent. Third month, even bigger dent. Fourth month, even bigger dent. It's not the same impact each time. That is why this is so pivotal to reducing the term. If it was just $200, it would never add up to that. So that's how the power of compounding interest and compounding action work. But there's something else here at play that I think is bigger. When you make additional payments towards your mortgage, if something happens upstairs, you feel good about yourself. You know what you're doing. You know you're removing years from your mortgage. You know you're making a sacrifice. All of those things every single month build up psychologically in a positive way for you. You're doing something good for yourself. You're creating momentum. When you treat yourself right financially and you make the commitment to that extra payments and you start to see the impact of it, you gain momentum. It's like catching a wave. It's important to get right in the middle of that momentum and use it, because that momentum will make it easier for you to keep sticking to the plan. The current shifts, and when you are in that current going in the direction of your success, it's kind of easy to stay there. If you turn the other direction, it's hard. So that is why it's important. So psychologically, you're doing yourself a favor. One big mistake is people start to do this and they think more is more. So immediately they take their in this example, they take their $200 that they're paying and they say, you know what? I feel good. I'm making progress. I'm going to do 300 this month. I'm going to do 400. That sounds mathematically great, but I would caution you there. Be really careful to not spurt your energy. The compounding will take care of itself. I would argue stick to the plan, don't veer off, because it will create a burnout. If you get excited one month and do 600 and then have a bad month, that changes your momentum a little bit. Even if the impact is positive, the momentum is changed, it's tweaked. If you find $100 somewhere in a something that you're paying for that you don't need anymore, pull that back and put it in there, fine. But keep consistent, because I don't want you to burn out. And that's the worst thing that can happen. What about those lump sum payments that I receive? Let's say you get a big tax return or a big bonus at work. I hear a lot of experts talk about, that's great, take that and apply it to that. You can do that. That's actually a pretty good idea if you're comfortable with it, but you don't have to, because again, that is outside of that plan. But if you do it, just know what happens. Have your lender pull up an amortization schedule and run that for you and show you the difference. Maybe doing that 5,000 isn't a good move. Maybe it's good for you to keep it in a little slush fund, or maybe you want to use it to pay off some credit cards or take a vacation, enjoy life a little bit. That's okay. The whole purpose is to be comfortable and use momentum and use the power of compounding interest to carry you through. If you would like to run the numbers on this, I am happy to show you how. All I need to know is your mortgage balance, your current interest rate, and then we can kind of crunch some numbers and see what the additional payment you make every month does to your term. So there's a lot of strategies behind this. I would encourage you to take a customized approach with a lender or with a specialist, just to make sure that you are doing this the right way. So for a customized plan or a conversation, or if you have questions beyond this, let's talk. I would love to help you out. There's nothing better than talking to a client that I helped 10 years ago come back to me and say that they are almost paid off on their mortgage. It's happened before, and it's really, really cool. Love to help out. Tim Rhey, True Rate Mortgage Group. Give us a call if we can help. Have a great day.